In the wake of the new recapitalization drive for the Nigerian insurance industry by the National Insurance Commission (NICOM), Coronation Merchant Bank Research Team published its report on the Nigerian insurance industry from the Lagoon to the Ocean. At a press briefing in Lagos, the head of research for Coronation Merchant Bank, Mr. Guy Zatoritsky, gave insight into the planned reforms of the insurance industry by NICOM and the need for growth.
And there were two questions that we asked ourselves. The first one was, what's the implication of NICOM reform on the insurance industry? So that was kind of like the first question. We've seen a NICOM reform back in 2018. It didn't really work. And so what's the implication of NICOM reform this time around? But then the other question was, why insurance? What really is going on in insurance, and what is insurance for? So we felt that if we didn't strip back the question right to what is insurance for, then we weren't going to answer the question, and we weren't going to get anywhere near close to understanding what NICOM was trying to do, and what the result is going to be. Insurance really covers risks so that we can go out and take risks. And it doesn't just apply to that example, it applies across industry, transport, commerce, communications, manufacturing, every economic activity you can think of is going to be enhanced with insurance. This is a graph which shows you in the blue line on the left-hand side, insurance penetration. In a lot of cases, you're going to compare Nigeria with countries that are much richer. South Africa, the world in general, places like Morocco, for example, they're richer than we are. Yeah, but you can also compare Nigeria with places that are just as rich or as poor as we are here in Nigeria. India, Kenya, and Nigeria, more or less the same GDP per capita. IMF is giving around $2,500 nominal GDP per capita for each of those countries. And yet the insurance penetration rates differ enormously. India, 3.69%, Kenya, 2.37%, and Nigeria very nearly off the scale. In fact, it's so off the scale at 0.31% that we actually have to highlight in the graph, because you can't read it off the graph, right? So the insurance density, which is the premiums per capita, is $6 per capita, and the penetration is 0.31%. So we have an extremely underdeveloped industry, and yet we're not saying that Nigeria has to get richer to get a higher level of insurance, right? Because these other countries on the same income level have much higher levels of penetration than we do. So emphatically, we're not saying the middle class is going to grow, people will take up insurance. We're just not saying that. We're saying at the income level that we're at, this is what we could do. We could go from 0.31%, I believe, to 3.69%. It would take 8 to 10 years, but it really could happen, which is shocking, because if you grow that fast, you're growing at about 25% compound real per annum for 10 years. And look at this. This is probably my favorite chart. It shows that if you look at, so on the left-hand side, you've got nominal premiums of the life in the dark blue, and the non-life, or general as it's sometimes known, in the light blue, in millions of naira. And on the right-hand side, it's the same data, but we adjust that for inflation. If you take the non-life and the life streams together, adjust for inflation, there was no growth over 10 years. NICOM reform is about a reform introduced in May 2019 that's effective in June 2020. So all the capital raising that has to be done by June 2020. Reminds us very much of the CBN reform of 2004. This was Professor Charles Saludo's reform. You may remember it very well. When he reformed the banking industry. And what he said was, I'm going to take the number of banks down and introduce a minimum capital level for banks. And he got the number of banks down from about 89 in 2004 to about 25 by January the 1st, 2005. So from 2004 to 5, it fell from 89 to 25. So if we look at the number of insurance companies we have now, they're about 59. I think we'll get down to a number around 25 again. So banking reform went from 89 to 25. I think in this instance we get from about 59 insurance companies to about 25 this time next year. And look what happened. This is the total bank sector loans, gross loans, adjusted for inflation, so in 2001 prices. And they took off right here. So here's Professor Charles Saludo. He reforms the system around here. You get down to around 25 banks here, and look what happens. There's something like 27.9% compound annual growth rate for 5 years in the banking industry. So the banking industry that we have now, with a massive increase in financial inclusion, many more deposit accounts and current accounts than we had before, is a result of the Saludo reforms of 2004. So the question is that a one-off? Now you notice that bank loans then fell in 2009-10, and we all know what happened. That was the global financial crisis. Nigeria's crisis, oddly enough, happened about a year later than everyone else's crisis. We weren't quite in sync, and then we grew again in bank loans up until 2014, and here's that drop-off in oil prices. You all remember Q4 2014 and the slide in prices during 2015, and the banking sector did not have a good time, and then we went into recession, and then in 2018 we saw some of these banks actually finally forcing their oil customers to actually pay down their loans. Their loans fell again. But basically the message here is, the Saludo reforms of 2004 were a massive success, and the question is, was it a one-off? And does it apply anywhere else?
He made a strong case for rollout of microinsurance in Nigeria, like India and Ghana, that have achieved significant growth through the scheme.
So one way I'd say is look across to those other countries that have that very good experience in having high or relatively high insurance penetration, despite the fact they're no richer than we are. So the one we chose was India. And there's masses of data on India. And total insurance premiums in India grew by 11.5% year on year for 6 years in US dollar terms. So that's pretty solid growth. What's standing in the way so far is getting the regulatory environment and the regulators to work together. And I think that may be the key, that is the key challenge going into 2020. You're going to have a recapitalized industry which has put up a lot of money to stay in the game, and they are not going to put up with another 10 years of flat real-term growth. And they're going to say, we need to have the environment, the regulatory environment, in which to expand and use these technologies to massively expand our reach. Because at the moment, some of these companies, even the largest companies, are really only servicing a few thousand or maybe a few tens of thousands of customers. But really, technology today means you go and service 10 million customers at a time. So it's possible. So the end of the talk really is about trying to get the Central Bank of Nigeria to allow bank assurance to develop in such a way that that can be a channel, getting the Communications Commission to agree with the insurers that they can do that. Actually, you used to be able to get, to distribute insurance through telcos. So if you get the regulators working together, you get NICOM, the CBN, the NCC, thrown for good measure the development finance institutions who are very keen to get microinsurance going, and I think we can go into a phenomenal period of growth starting in 2020. That's what the banks did, and we think we can take the insurance industry from the lagoon to the ocean.
Mr. Gaizatoriski speaks further on the outlook for merger and acquisitions in the Nigerian insurance industry for 2020 and what Nigeria must do to transform the sector.
The penetration rate, which is your total national gross premiums divided by your nominal GDP, reaches different levels in different countries of similar wealth. So India has similar wealth to Nigeria. Penetration rate in insurance of 3.69%, Kenya has 2.37%, and we have 0.31%, which is very low. So the way forward is to, one, to recapitalize the industry, that can build trust, and then seek ways in which the industry as a whole can go for scale, because at the moment it's not very profitable. So that scale can be reached by distribution to the mass market, and that can take place in a number of different ways. Among them is a rollout of microinsurance that development finance institutions and other agencies and foundations are keen to help with. But there are other ways of doing it too, such as bancassurance, partnership with telecoms. Every market that successfully rolls out insurance does it in a slightly different way. Nigeria will find a way, but with a better capitalized, rationalized industry in 2020, the chances go up that that is going to happen.
One takeaway from the report is the fact that in real terms, the Nigerian insurance sector has not achieved the desired growth in the last 10 years. It is expected that the NICOM recapitalization move will reposition the industry to explore microinsurance and adopt technology to deepen penetration from 0.31% to about 3.69% in the next 10 years.